And investors are shifting back into tech stocks as uncertainty remains about the coronavirus and new restrictions in several states. For more on that shift, I want to bring in Michele Schneider, Managing Director of the MarketGauge Group. Hi, Michele. Thanks so much for joining us today.
Thank you, Greta. Nice to be here.
Earlier this year, we saw a record-breaking surge in the tech sector amid the pandemic. Now, as restrictions are being ramped up again, we're seeing that similar activity. Why do investors see tech stocks as a safer bet during this uncertain time?
Mostly because they've been the innovators for the work-at-home environment, Zoom being the classic example, but many other technologies that have come out as a result of people needing to connect through distance, businesses to connect through distance. And so it's actually emerged a great level of innovative technologies that we've not seen before.
Wall Street is optimistic that another stimulus package will be passed hopefully before the end of the year. Now, how would the current bipartisan package that's being discussed help stimulate the U.S. economy?
Well, any stimulus is going to help at this point, considering we went through the big debates before the election with nothing happening and tremendous disappointment, although we didn't see it reflected in the market because vaccine hopes began to rule. But now we're back to stimulus hopes. It's become a bit more urgent in that the end of this month, we have people who will then allowed to be evicted from their apartments after a moratorium. Unemployment checks will run out. So the Dems are looking at it as a stopgap. They're definitely more negotiating than they were before, and with McConnell and bipartisan support, that $908 billion will help. It's not going to be the $1,200 stimulus check that people were hoping for, but at least it will increase their unemployment benefits back to about $300 a week. So it's a plus. Anything is going to help at this point.
You mentioned the vaccine hopes, and vaccine optimism has driven the most recent record-setting rally, pushing the Dow above that 30,000 mark. As a vaccine is expected to begin distribution this week or next, what type of reaction can we expect to see on Wall Street?
Well, we're already started to see it, although it was mentioned that the S&P fell a little and NASDAQ record highs and the Dow fell. The Russell 2000 has really been the star of the show, pretty much since before the election, but certainly since the election. And why that's significant is because that represents the small cap index, which is 2,000 companies, all within the United States. And that's really where you're seeing the rotation. They're calling it a value rotation, but it's really a rotation into anticipating that with the vaccine and businesses reopening and consumers actually feeling so stymied, just bursting at the seams to get out and start spending money, whether it be through traveling or consuming. That's why I think you're seeing the vaccine hopes really coming through in actually almost a more significant way for the economy than, let's say, a tech rally. Because if you start to see manufacturing going up and consumer retail going up and transportation going up, now you're talking about the inside of the market or the real sectors related to the economy.
A lot of people throughout this pandemic have looked at the stock market as being kind of disconnected from the actual economic problem, saying we're seeing these records on Wall Street, but people at home on Main Street are struggling to pay their bills. Stock market is, of course, a forward-looking indicator. What are investors looking at for the future of the U.S. economy, and what are they optimistic about at this point?
Well, for one, people obviously are optimistic about the whole electric car. Tesla went crazy today in spite of the weakness in the market, and it's become almost a bellwether. People are very optimistic about some of these small cap growth stocks we were just talking about that you'll see not only in IWM, but some of the other ETFs, VBK being one. I think people are also optimistic about demand increasing in terms of oil and gas, even, which has been so under pressure for so long. And definitely in the retail sector, people getting out and traveling, cruise lines, airports, et cetera. This is really where I think people are looking forward to investing in. And in terms of the divide or the disconnect, as you say, yeah, I mean, it's been a little bit like the new Disneyland is the stock market. But on the other hand, what we have seen this year, and I don't think it should be underestimated, is a whole new wave of young investors, whether it be through Robinhood or other means. These are people now who are getting involved in the market, and that's a good thing, and we hope to see that continue.
All right, Michele Schneider, Managing Director of the MarketGauge Group, joining us to discuss the focus on Wall Street amid the coronavirus pandemic. Thanks so much for coming on the show today.
Thank you.
Want to see more videos like this? Visit OANN.com for immediate access to all the clips you've been waiting to see.